Mr. Howard, your mics.
I'll get everything right here in a minute. Tennessee Collection Service Board meeting is called to order September the 10th, 2014. I guess we'll have a roll call.
Yes, sir. Bart Howard,
Present?
Elizabeth Trinkler,
Present.
Elizabeth Dixon,
Here.
Steve Harb,
Here.
Chip Hellman.
Here.
Everyone is present, Chairman.
Ma'am. And would you read the notice of the meeting, please?
Yes, sir. This meeting's date, time, and location have been noticed on the Tennessee Collection Service Board's website, included as part of this year's meeting calendar since August 4th, 2014. Additionally, August 4th, 2013. Additionally, the agenda for this month's meeting has been posted on the Tennessee Collection Service Board's website. The meeting was also noticed on tn.gov's web public meeting calendar.
Everyone will review the agenda, and if we have anything to add or adopt. If not, I'll entertain a motion to approve the agenda.
Approve the agenda.
Are you referring to the minutes or the agenda?
We do
for
the
this
agenda
meeting?
first.
Oh, okay. I'm sorry.
Agenda.
A motion's been made that we approve the agenda and seconded. All in favor?
Aye.
Minutes, we'll review the minutes. We got these minutes on the, in my email address. Do you want to go over them? Are you okay with
Oh,
the minutes?
I looked at them here
Okay.
just a few
I make a
minutes ago.
motion, we adopt.
Okay, a motion's been made that we approve the minutes from the July 9th meeting. Is there a second?
Second.
And seconded, all in favor?
Aye.
Approved. A legal report, Mr. Whitaker.
Thank you, Mr. Chairman. Members of the board, you should have before you a draft legal report. It has 16 items on it for your review and consideration. If you would please take a few minutes to go through these items, mark down any questions you have, and then once everybody's had a chance to look at it, I'll be happy to take and answer any questions as needed. And with that, I'll turn it back over to you, Mr. Chairman.
Everybody had an opportunity to read the legal report? Questions? Had there been any other complaints from this non-agency about collecting debts without a license? Is this the first complaint that we've had?
Are you sure you're referring to number 2, Mr. Chairman? Because that item, the respondent in that item does have a license.
Zero 140052001. Hit the wrong tab. Sorry.
Excuse me.
Okay.
That's all right.
Just trying to get away from it.
It's okay.
Any other questions?
On number 7?
Yeah.
On number 7, was there a recording? Did you inquire if there was a recording of the calls? And I really don't know when the allegation of abusive language, at what level that becomes.
Well, Mr. Harb, that's at least as much art as it is science, and it obviously it kind of depends on the facts and circumstances. But the reason for the recommendation being what it is even if I took everything the complainant alleged as 100% true, while kind of up to the line, it doesn't appear that would be something that could be sustained at a formal hearing as a violation. And in case I haven't presented any items with this letter of information recommendation to the board, this is something that formerly Assistant Commissioner, now Deputy Commissioner Giannini advised as an option to, even if we don't even feel there's enough for a letter of warning, just to let somebody know, hey, look, this is kind of a close call, and you may want to talk to your people about this, because if it goes much beyond that, then you could be looking at a problem. To your point, this seemed to be more in the nature of, standard collection tactics, just trying to say, hey, look, you're going to have some problems if you don't deal with this. You may be looking at a garnishment and all of that stuff, which is true and is not a violation, because that is an action that could lawfully be taken. Now, to contrast that with something else, had they said something like, oh, well, we're going to arrest you, we're going to take out a warrant and send a sheriff's deputy to your house or something like that, then obviously that would be a different story. But because it did not reach that level, and even taking the complainant's allegations as true, didn't appear that we could sustain any violations. So that's the reason for the recommendation.
I think deep within that paragraph, there may be respondent, complainant confusion
That's
in the middle.
That's possible. If you can-
After settlement discussions with the complainant reached an impasse, the respondent received a request from the respondent. So that should be complainant.
Yes, that's correct. I will make that change. Thank you.
Recommendations, does that seem to satisfy everyone? Okay, number 7. Any other questions?
I have no other questions about the report.
Entertain a motion that we accept the report and the one correction as noted.
So moved.
Is there a second?
Second.
And seconded, all in favor?
Aye.
Matt, who made the second? Or Ms. Dixon?
I did.
Yeah.
Okay.
A complaint comparison report.
Sir?
Kimberly, help me get back to where
Okay.
I belong, would you?
On tab 3, you have the complaint comparison report. I'm happy to report that the division's performance measure goal is 80%, and currently we are at 94.44%.
Very, very, very good.
For those
And-
of us that have been on the board for quite a while, you would recognize a big change in that. Way to go, y'all.
And, Mr. Chairman, at our last quarterly complaint meeting with now Deputy Commissioner Giannini, he did comment that the report looks great, and he kind of wishes all the program reports looked that way, so thought I'd pass that along as well.
Goes to you all.
If there are no other questions on tab 3, we'll move on to tab 4. And this is a renewal application. And company's financials are actually what I have a question about and what I'm presenting to you. Their total assets not meet or exceed their liabilities. Page 9 and 10, they've enclosed their financial statements.
Done it too, ain't you?
Yeah, it's stuck.
Pardon me.
Offer any explanation in here anywhere, Ms. Wiley? That,
They had a loss in prior years of $253,000. Equity. Don't know if trust fund liability of $100,000.
Mr. Harb, I'm sorry, your mic is not,
Not working?
yeah, it's not
Sorry
playing
about
with
that.
you.
Okay. My comment was, they have $144,000 in trust, and they have a trust fund liability of $100,000. But they had a prior loss that eliminated all their equity. So while they're in trust, your observation's correct, they have more liabilities than assets. Shareholder seems to take money out on a regular basis. They have distributions of 14.4 and a loan due to share, a receivable from the shareholder. No, due to the shareholder of 15. Our position not to grant licenses when there's not equity?
We want their assets to exceed their liabilities, and when they do not, we present it to the board. If there's something the board would like us to consider in the office prior to presenting, certainly.
Mr. Chairman, I think your question gets to, or where it's trying to go is the financial responsibility question. If it looks like any given agency that comes before the board in this manner is either already in a position where they're going to have difficulty meeting their ongoing obligations, or is already there, or worse yet, has some kind of trust account deficit. From reviewing this information, it appears that with the last couple of years having losses, I mean, that's not a good thing, but given the size of the company, which looks like about 3 to 3.5 million a year in revenue, income, and the like, couple of years loss of about 200,000 is obviously not what you would like to see, but doesn't seem like they're going to go out of business tomorrow. And beyond that, even if you take away the trust account monies owed, if they had to liquidate their assets tomorrow, I think they could still cover a year's worth of loss and have a little bit left over. So I don't think that.
Good. I mean, what I find interesting is the net loss on page 4 of their statements is $253,645. The net loss carry forward on their balance sheet is $253,645. So they lost all the money in 2013 that they lost. I can't tell how many years they've been in business, but they had a real bad 2013. They have loan fees and organizational costs of $1,800, and they have a pretty good sized loan on the books of $384,000, only $72,000 of which is due within 1 year. So they've got a long-term loan. Now, if the loan is from the owner, or if the loan is not a bank loan, then I would agree they're just fine. But if the loan's a bank loan, it's due to an outsider, and the owners are signed on it, then they don't have any money because the loan exceeds their accounts receivable and their general funds of cash on a long-term basis. And their fixed assets aren't probably worth much. So without further inquiry as to who they owe that money to, I would agree with your statement if they owe the money, if they put the money in themselves. If they owe it to a bank, they lost a lot of money last year. And with salaries on page 5, they show $1.9 million of salaries against 59% salaries. Is this a renewal or is this a
This is an application for renewal.
So they were an agency last year.
Yes, sir. Within the last 2 years.
I was going to say, how long have they been licensed?
I'm not sure. I can find out for you, though.
And Mr. Harb, to your point about who they owe the money to, it's probably also relevant even if it is a bank, what the repayment terms are. It doesn't automatically follow that if they owe it to the bank, they're in big trouble, but it could if the terms are not good and they, have large ongoing obligations to service that loan. Because I've seen similar situations in the past where you've got 5 years of they don't have to pay very much money on the ongoing servicing, and then at the end of that 5 years, they either balloon payment or roll
It's
it
5
over.
1/3 years left on the loan. At $384,000 note payable and amounts due within 1 year is 72. They've got 5.3 years to pay the loan off. So, yeah, they might be cash flowing because the debt service is low, but depending on who they owe the money to, somebody owns them. They lost an awful lot of money last year.
We are certainly happy to inquire as to whom this money is owed, whether it's a bank or shareholders or owners of the company. And once we have that information, we can either report back to the board or do whatever the board wishes with it.
Board's policy is, I'm just observing the information in the financials, because when you stated they look like they're strong enough, that's a correct statement depending on who they owe the money to. If they've put the money in themselves, they're just fine. They're just doing accounting and tax stuff. But
The other question that I have on the balance sheet that they completed, the board's balance sheet, it shows cash in bank $160,000 on the same date that the accounting firm says they had $140,000. I'm wondering why there's a difference in the balance sheet that they prepared on our form as opposed to the balance sheet that the accounting firm prepared.
Sir, typically what you will find with these types of things is that someone in the compliance division is filling out our form. and providing the supplementary information. So my guess would be that the person who's completing the form is not versed how to translate those numbers from one form to the next.
Also show that they have 138,000 due to clients on the handwritten form and only 100,000 on the financials. Trust accounts, the big one to me. I can't really see from their financials what they say is in. But they have 160 in trust, so they're covered there.
Reviewing these, I always look at the financial statement that's been prepared by the CPA as the authoritative.
I think that you're correct that you
In
should look at
knowing.
it as the authoritative one, but if we have the accountant saying one thing and the company saying another thing, at least it brings and in addition to the fact that they're out of equity and a minus equity, I think it deserves a question as to what they're doing and particularly explain the difference in the completed form that the corporate owner, president, or whoever he is, has prepared and the financial statement prepared by the accountant, why there's a difference.
We'd be happy to add that to the inquiry as well,
okay.
if you'd like.
Ask them
Okay.
to speak to the differences between the two statements.
And I think knowing more, like Steve said, knowing more about that large note payable would be important to know too.
Handwritten stuff shows it's a small business loan of 171,000 and contingent liability of 171. Small SB loan, James Peacock, president of the company, looks like he's personally guaranteeing it. The way they wrote that, but the liability amount certainly doesn't match the financials.
Bring this back, I guess.
Yes,
Back to us.
absolutely. I have the two questions regarding specifics about the loan as well, and then speaking to the differences between the two statements. Was there any other?
Anything else on that company? Okay.
I could have a motion to table pending the information.
Okay. I'd entertain a motion to table the vote, to table the question on the Delta
So moved.
company. A motion's been made, is there a second?
Second.
And seconded, all in favor?
Aye.
Is that good enough, Ms. Whaley?
Yes, sir. Thank you so much. Okay, on to tab 5. In tab 5, this is an application, an original application for licensure, and there was a concern with the information that was presented. They did not provide, they provided their financial statement on the form, on our form, and in that, they stated that they had accounts payable to clients of $161,648. They did not show any money in trust, but did state that they have a trust account and provided a letter on page 10 related to the funds due to client and a timing difference, and I just wanted to present that to the board for your consideration.
why there's a difference. Maybe I'm missing something, but letter is, he's saying they closed their books on the 15th, but this is information based on the 13th, and until the 15th, they got out of trust. Is that what's happening?
It's very confusing as to exactly what they're doing, and that, again, is why I brought it before the board. I
believe that says the 15th and then the 30th.
30th,
And so,
which is even stranger to me, but
If it was on the 15th, he ought to have enough money in his bank, enough money in his trust account, no matter when it is done.
Mr. Chairman, if you can look on page, well, if this will tell me what page it is, page 19, this agency has included a bank statement of their trust account, and you look about midway down the page, it says balance summary. It lists the daily ongoing balance of the trust account, and it looks to me, and again, I'm not financially trained, so take this how you will, but it does look like on just about every day, if they had to write a check to cover their trust obligations, they could. But that's my take. I'm obviously welcome hearing from Mr. Harb if he has a different view or opinion in light of his financial training.
Calculation's correct, except we don't know what the liability is. We know what their cash is, but we don't know what the corresponding liability is, so it's a nice cash balance in the trust.
Or outstanding checks.
Why they're paying on the 15th, why they're settling on the 15th.
It could be that they're saying that on the and again, this may be an issue for clarification, but I guess they stopped calculating what they owe. Maybe their cutoff date is the 15th and they write trust checks on the 30th or vice versa. I mean, I'm just trying to figure it out, but
Even if they did that, that wouldn't keep them in trust.
We should request financial statements that run through the same date as the statements. It's that couple of day lag that's just doesn't make sense. I mean, if they're settled on the 15th and our statements close on the 15th, and the financial statements only direct activity through the 13th, you know, doesn't make sense to me.
They could close their business out on the 15th and say they owe the clients X dollars, but not close their business until the 30th, and then they pay their clients, but they're running behind. They're likely out of trust before the end of the month. Because they're using the money that they're collecting from the 15th to the 30th to pay their clients.
Right.
So I think we need more explanation on this. Would table this application until more explanation.
I make that motion.
Second.
Seconded. All in favor, say aye.
Aye.
Okay.
Mr. Chairman, just to make sure I understand what the board is asking for, we want to know what the trust liability is, because that was a piece of information that's missing on the board's form, and it doesn't appear to be covered with any specificity elsewhere in the documents we have. So with that information, at least we're farther along the path to seeing.
We also want to know everything on the same date. If they settle on the 15th, then we need it reconciled through the 15th. Not a bank statement doesn't show the outstanding checks. It just shows the money float. So we need the reconciliation on the 15th, which is the same day that the settlement is. So
I've never seen one that had that settled on the 15th, but their financial statements are on the 30th. They should be together. I don't suppose there's any reason why they can't do it that way.
No, and this bank statement they've submitted runs from February 18th through March the 14th. So it doesn't include the 15th at all. And so it looks like, based on the letter submitted, that the 15th is the big date where the big stuff supposedly happens, but that's not in what we have. So at least in theory, their next statement should go from March 15th to whenever it goes to, and that'd probably provide a little better picture.
That's a reconciliation out of their system. It's not the bank statement itself. That recon is generated by the computer. That's a recon, and you can generate a recon any day you want through a range of days, but that's different than the bank statement itself.
Okay, I was looking at page 16. I just thought, since it was on U.S. Bank letterhead,
Oh, okay.
and
If it's, yeah.
I
They did provide the bank, part of their bank statement.
going from page 16 through 16 through 19, this looks like an actual bank statement. Now, whether it was printed online or it came in the mail, I have no idea.
That is the bank. It's the form in front that's a reconciliation. It didn't have the U.S. letterhead on it.
That's correct. We will look at that information and report back.
Okay. On to tab 6. And I'd like to draw your attention to page 13. And this question is really related to, does the board consider what they've provided as substantial to meet the requirement? The company basically says they internally prepare and perform the process of accounting records during the preparation of tax return. They do not have an audit or review performed by an independent CPA.
I think our statute requires that they have a CPA or a public accountant, of which there aren't any more of, I understand.
In Tennessee.
Kimberly, is this an initial application or is it a renewal? It looks like
This is an initial application, so yes, it is required.
Okay. Okay. For initial applications, that's TCA 6220-106.
And the reason why I'm
Two.
presenting this is that we've requested, and this was the response. We requested a complete set of financial statements.
We don't require an audit or review. We only require a compilation, which they can provide. And a compilation is simply having an accountant do the information on their letterhead. You don't even have to have footnotes. So it's not like it's way far out for them to get that done.
The statutory language says prepared. It doesn't specify the level of review, so compilation being lower on the totem pole, they could do that, and as long as a CPA is signed off on it, even if it's just a CPA adding up their same numbers and saying that this math is right, I still think they meet the requirement if they do even that.
Compilation has some standards.
Right.
But not the same as a review or an audit. So when we request, we just have to have we can't specify what report they get. We just want a report prepared by an outside CPA and let them decide. I think someone mentioned that we require an audit or review. I don't believe that's correct.
That was what they stated in there. I think that may have been an interpretation. But again, when we requested that they provide the information, this is what they presented, so. Board for your review. But I can certainly, we can follow up with a letter saying,
It should be
just as you
easy enough
stated,
for
the
them to have
compilation report, it is
Right.
obtainable.
And we'll include a citation to the part of the Collection Service Act that requires it, just so, they're not thinking, hey, we're making this up or adding stuff because we want to. The statute is the statute, and you can either give us what we need or we can't give you what you're asking for.
It looks like a big company that's been in business for quite some time. They're just now licensing in Tennessee. Need a motion
Please.
to table?
Yes, sir.
Okay, entertain a motion to table for tab 6.
So moved.
Moved, is there a second?
I'll second.
And seconded,
Mr. Chairman,
Yes,
I'm
sir.
going to abstain from this vote
okay?
because I have knowledge of this company.
Okay, Ms. Whaley, if you'll notice, Mr. Hellman abstaining.
Yes, sir. I have.
Do you want a roll call? Is that necessary with an abstention? Okay. All in favor of the motion, say aye. Aye. Any opposed? Okay.
Next item is on tab 7, and I will actually defer to Mr. Whitaker. He has been communicating with the company.
Thank you, Kimberly. Board members, what you have before you is a letter requesting an interpretation of the Collection Service Act relative to the collection of collection fees. And essentially, this company appears to be set to do collections for student loans. And their inquiry prior to doing so is whether they are able to collect certain fees relative to the collection effort itself as part of their collection process. Quoting from paragraph 2 of the letter, says this entity's policy is to only collect a percentage-based collection agency fee if requested by the school, and only if the borrower has expressly authorized the fee in the borrower contract. The portion of the Collection Service Act at issue, which is cited in the letter, is that TCA 62-20-115, subsection B2, states as a violation the collecting or attempting to collect from the debtor any fee, commission, or other compensation not provided by law for collection services rendered to a client. Now, there's other language there, but it's not really relevant to the inquiry. This entity is requesting an interpretation of whether law can also include contract law. It doesn't necessarily have to be statutory, either federal or state, or even regulatory. If the fee that they are attempting to collect is authorized by contract and has been signed off on and agreed to by the debtor, in this case the student loan debtor in the loan documents, they are asking if it's acceptable to collect what the contract says they can collect. My opinion is that law, the phrase law, is probably broad enough to include contract law, and if the legislature had intended to limit the types of law under which these kind of fees could be collected, they could have done so. But I believe this is more of a due diligence measure prior to beginning this practice. And I'd advise the general counsel who submitted this letter that we appreciate folks asking on the front end rather than doing something and then being in trouble later. So I'm happy to entertain any questions, but provided that the facts in this letter are as represented and the collection of these specific fees are provided for by contract and signed off on by the debtor, then it doesn't appear that there's a problem with that. But because it's something that, at least in my tenure as board counsel, it doesn't appear the board is specifically addressed head on, I wanted to bring it to your attention and be able to answer any questions you may have.
I think they're fine. Personally, does anybody else have a problem? I know the courts in Tennessee have, on contracts that say all collection fees or fees involved in collection, attorney fees or what have you, I think the courts have taken a position that they're going to change that if they want to in a lawsuit. But attempting to collect those fees, I think, is perfectly legal.
If it's something I
Contract,
can
yeah.
remember us ever doing as a board is, maybe, I guess time gets away from me, it's been more than 10 years, but we have, if there's been some question, we've asked to review the contract between the agency and the client, just to be sure that it did call for that, and that it was a signed financial agreement and so forth. But we've addressed it in the past and have found that if there is a contract, then
And I've advised the general counsel who submitted this letter that even fees provided for by contract law are subject to certain limitations. If they're crazy or way out of whack, if it's a $500 debt and they're trying to collect $500 on top of that as their fee, a court may look dimly on that under a reasonability or, unconscionable standard. And then also, they have to make sure, I think, that they're not running afoul of any applicable usury statutes and if it's an interest-related charge of some kind. But other than that, I think their inquiry is pretty straightforward, and my recommendation would be that the board say that that is an appropriate interpretation and allow me to respond to this attorney accordingly.
Is there a motion to that effect?
I'll make that motion.
Motion's been made. Is there a second? And seconded, all in favor?
Mr. Chairman, this is highly unusual. Usually I don't know any of these companies, but I happen to know personally the general counsel for this company just through the history, and so I'm going to abstain from this vote as well. I'm very sorry, but.
Okay, all in favor, say aye.
Aye.
And Ms. Whaley, if you'll note on the record that Mr. Hillman abstained.
Yes, sir, I have.
Okay.
The next item is on tab 8. And I'm bringing this matter, this is something we're seeing frequently now when companies are sending in their information. They're providing a balance sheet that looks very much like what is presented. And I really want the board's opinion on if this is proper. For instance, we did not feel that this was actually a prepared set of financials. And when we sent it back, basically what they did is they signed at the bottom of the page that this was prepared by the CPA. And Mr. Harb, I welcome your expertise. To me, this appears to have been generated simply out of their in-house accounting system, just based on the appearance of it. But I defer to the board as to your opinion if this is
Looks like
complete and appropriate.
the CEO signed it as certified true and correct and only provided the CPA's name. That doesn't look like a CPA signature. It's just his name and phone number, but the certification on both the balance sheet and the P&L comes from the CEO. And typically, the CPA didn't do this. The CPA hasn't signed it. So if our requirement is to have an outside firm provide the financials, if a CPA firm wanted to this is QuickBooks, and CPA firms can upload QuickBooks from the client system and actually print it out like this, but they need to put their report with it. And if this actually is a CPA's report, I wonder what our duty is to provide it to the accounting board. Now, I think you know something about that, so
Yeah.
we would have a duty to let them know that a CPA is not practicing. Probably we would have that duty. But I don't think a CPA signed it. What do you think, Chris?
Well, the handwriting looks similar enough that it at least seems like a valid line of inquiry to ask. Did the CEO just sign this and then write down the CPA's name and phone number?
I also wrote the name down because the P in his signature and the way he wrote his name is different than the CPA P, way different. So it's not, I don't know that it's the same guy that wrote it, but any CPA that would sign like that, I just don't think they'd do it.
I don't think they would either.
They can't charge for that.
No.
And this is what we're receiving typically with renewals. With our new form, they will send this in lieu of completing the form. So it's becoming very prevalent that I'm receiving this documentation, and I hate to send things back without consulting the board as far as if it is acceptable.
They need to put key numbers in the new form and sign the new form.
Yes, sir. Because when they send this leads, we basically have to do the work for them, and
And
we
do the
shouldn't
work.
be.
No.
Exactly.
No, we can't do the work for
Right.
them. It's their certification that they're signing that this is correct. So they need to transpose the key numbers and provide the form as a supplemental information. But on an initial application, it doesn't change the requirement that a CPA send a financial at whatever level of preparation they do.
So would you consider this acceptable as supplemental for the renewal?
We don't require a CPA's form for a renewal. We require the CPA's information.
We require it to be prepared by a CPA, in both instances, correct, Chris?
I'm looking, just give me 1 second.
It changed, as I recall, when we had a conversation earlier about the balance sheet.
Don't
several-
require,
I'm looking at 6220-112, subsection B3. That's under expiration and renewal of licenses. Application shall be accompanied by a current balance sheet prepared by a licensed PA or CPA. So it looks like a similar requirement.
Doesn't pass at all. And what you're getting doesn't pass. Unless you have a report that's attached. Now, a CPA could send this financial and put their cover on it and say it's their compilation. But I doubt they would. But they could, as long as they referred to the numbers and they had some footnote on it that showed it was their compilation, but there's no cover letter.
And Mr. Harb, look, to that point, back on tab 4, that the board looked at earlier, there is something from a CPA firm that says accountant's compilation report. It seems to be that very letter you're referencing, which is present on tab 4, but not in what Ms. Whaley presented for tab 8. So
Yes.
looks
You're-
like that's what they would need to do
Yeah.
in addition to what they're submitting.
Accountants don't do the financials, they'll retype them. The accountant's work is the letter. Accountants provide a report. They don't provide the numbers. They assemble the numbers, but this letter in tab 4 is the accountant's work, and we need that.
Are what we saying then that we want the CPA to prepare the form that we send out on our renewals?
That's not even necessary. It is the licensee's obligation to complete the board's form.
Okay.
The CPA's obligation in terms of preparation is for them to compile or whatever they do with the financials that they are saying that they reviewed and agreed to. Could be the same thing, but, you know.
I explain something for the
Please.
board. If the CPA prepares it on our form, there is a response, there is a pre-prescribed form, and they have to give a report completed on a pre-prescribed form. What we've done is limited their ability to express information. So CPAs have a whole different standard if they fill out a pre-prescribed form. So what we were trying to do is say the pre-prescribed form just has a few pieces of information that the person puts on there and signs off on, but the CPA report has to be their own report. So if a CPA actually, the reason we changed, I believe, a number of years ago, only providing the CPA's information, they won't sign our form. That's a whole nother standard of work. We can't ask, well, we can ask it, but it's just not going to happen. Yeah, the CPAs won't sign a pre-prescribed problem.
Okay, well, what's the standard then that we can tell folks when they send in a financial statement that we want?
Comes from their CPA with a CPA report, and the report is attached. What we were trying to accomplish is to be able to let the CPA provide the report, and then the person who's filling out, the compliance person, just takes a couple of numbers off the report and puts it on our form and signs it, and then references the CPAs as the detail backup for the assets, liabilities, and owner's equity.
So a
That ties them.
A QuickBook financial statement, as long as the letter is written, the CPA signs off on that QuickBooks financial statement is okay.
If we get a report from the CPA that says, I have compiled, because they're not going to just sign something like that. There are standards. There's a new standard, and I really haven't taken a course on it, I should, that says there's a whole nother level of standard that you can sign interim reports or non-compiled reports. Nobody really does that much. So we need the CPA report. And if CPA wants to submit that and attach it and say, this is my work, then yeah, I guess they can. I doubt they would.
Some of the, additionally, my question too, some of them, because it's by a CPA, if it, for instance, internally, if the person is a CPA.
Well, that's a different thing, because I looked for the signature on that one, the president, the CEO. If he'd have put comma CPA and put his license number under it, that form would be good. So
I just want to be able to, because those questions will come up from the licensees. I just want to be able to respond.
that's how I submit mine.
Okay.
I'm a CPA, I prepare, I sign this in my capacity as an officer, but I am a CPA. And so you can do that. But you have to say in what capacity you're doing it. It doesn't say you have to have a CPA who is in public practice. A CPA in private practice, on behalf of the company, can sign as a CPA and put your license number with it. That's good. Then there's no report. The report is the disclaimer of the fact, the capacity that you're preparing it in. That's a
Yeah, it is.
Well, but
Okay.
that's going to be a very, very small number
Yeah,
of
there's-
applications. And in fact, if I saw one that the same person was signing as CEO and CPA, it'd be the first or among the first.
But no, what Mr. Harper, let me make sure I'm understanding what you're saying, is someone internally can sign and say that, comma,
have to give their
CPA.
license number.
Right, as long as they, yes, and we always, we not only get their license number, we do verify with the state that they say they are licensed with. We go to the state's website and verify that. But what I'm asking is, internally, if, for instance, if I were the CPA for XYZ company, I could sign it, certify it as internal, comma, CPA, and that would still be acceptable. It doesn't have to be the president signing. Okay, that's what I just
They're
wanna-
probably going to hold an office. They would probably sign it blank blank CFO or CPA, comma CFO. In my capacity as CFO, I'm a CPA signing the report in private practice, and here's my license number. That meets our standard. It doesn't require a public. And I was in error saying there would be a report attached. In that case, there won't be a report attached.
Like, I wanted to bring this up again just because I am seeing it frequently now with the new form, that we're seeing this QuickBooks Peachtree type information being provided, and that sort of almost doing in lieu of, and I am suspect that they are having it prepared internally. So I wanted to bring that before so that I can, when we do have to have those conversations with the licensee, the board has discussed, and this is what is expectation.
Are licenses more frequent now than they have been? Are we getting more applications, more and more folks opening up, people dropping off? How's business?
Business is still, with the removal of the location manager requirement, we have seen an upswing in the number of applicants, and that has stayed relatively steady, 10 to 12 a month. We're coming into our renewal season. We have 280 licenses that are up for renewal in December, and I believe that will tell us with the new statute how many people will continue their license after. So in January, I can probably provide you with a more detailed report of how we're doing. We've only seen probably in the neighborhood of 15 to 20 people send in their license stating that based on the new statute, we are no longer required to be licensed. very small number. But maybe, again, the fact that they renew in December. We may have several who do not renew.
Any other business?
I actually have one final additional question. With the removal of the location manager, prior to location manager, applications for new licensure, applicants have been given a year based on the requirement of the location manager and having to take that test and the time it took to take the test. I wanted to see what the board's opinion was about lowering the application, how long we hold an application open, for them to complete their side. For instance, if we ask for additional information, or once we tell them that it's okay and they still need to pay the licensing fee. We've been holding them open for up to a year. I'd like to reduce that down to 6 months.
Does the statute say anything? Does it-
The statute and the rules are both silent regarding the matter. I believe it's been a policy of the board, is my understanding.
Well, license managers had a whole different set of problems. You're talking about renewals. So if,
Initial applications, renewals only have, they have 60 days? 60 days, and after the 60 days, they have to reapply. So this is only related to applications for initial licensure.
You're just saying that it used to be a year because the test only be given so many times a year, and everything was in except for them having a location manager, and so they would leave it open for that. Since you don't have that, I think 6 months is plenty long, yeah.
Okay. Could someone make a,
Yeah, I'll move that we make that change and reduce it to 6 months.
Second.
motion's been made and seconded, all in favor?
Aye.
Motion carries. Is there any other business to come before the board?
yes, we actually did skip one small item on the report. The legislative update, we are continuing to work with administration on preparing the report to the legislature regarding the apprenticeship program. That's an ongoing project.
Just as a reminder, the legislature in the recent session passed a public chapter requiring that each program, in conjunction with the Division of Reg Boards, submit on or before December 31st of this year a report regarding the feasibility, viability of an apprenticeship program, whether it's a good idea, whether it's possible, and things of that nature. Preliminarily, it looks like the Collection Service Board is probably not an appropriate candidate for that, and the report will reflect that, because this board and several others only license corporate or non-individual entities, pretty much. And the apprenticeship, for example, it's been in existence with Barber before, but now doesn't exist, but now might be reconsidered, who knows, is to allow an individual to get credit towards their education or other license requirements on the job, as opposed to in school or something like that, given that this board only licenses agencies and not individuals, with the location manager requirement being gone. That's probably what the report's going to look like. The deadline to submit the report is December 31st. This board meets again in November. I will have a draft by then for the board to look at and review in November. And if you have any questions, we'll review it at that time. But just wanted to make you all aware that that's being worked on and taken care of. No action required right now. And you'll have something to look at in November.
And adjourn.
Thank you.
Got through it.
Good job, Mr. Chairman.
Thank you, ma'am. Thank you, Ms.